What's up, everybody? I wanted to hop on here and do a little overview of the 15-minute slash, higher time frame trading that I prefer to do. So let's get right into it. We're going off ES here. This was CPI release in the morning. I actually caught the drop. I got in at like 38.05 down here, sold some down here. I held one until break even. I wasn't thinking this zone was going to hold, but that goes to show you to just play the zones. Don't have a bias. Don't think something's going to break. Don't think something's going to bounce. Just play the price action in zones. But anyways, so we did have this big sell off into our demand zone here. This is a really strong zone. If you look back on the previous days, this zone has held or this area in general, this 3750-ish has held, 1, 2, 3, 4, 5, 6, 7, 8, 9, almost like 10 times. So this is a very big key level on ES 3750. So we dropped into this zone on data. And then we had the open right here in the zone. So we started shooting up. As we shot up more, there was a little bit of a rejection at VWAP. That's the purple line here. But volume was falling off. And so to me, that doesn't signal a strong reversal. That just kind of shows more of a leg of a trend and then a pullback. And so if you go off the volume price analysis and from Anna Cooling's book, you'll see that this hammer right here has very low volume. And so what they call this is like a low volume test. So what they'll do is during an uptrend or a downtrend, they will pull back price to test for sellers. So they'll bring this price down to entice people to go short. And if sellers are strong, they will take that and start to dump it. If sellers are not strong, they will bid this back up and then pump the price higher for a second leg. And so that's exactly what happened here. So to me, this was a great long signal right here. Also, if you go to the 30-minute, you had a mini demand zone form right here from the pre-market, came down, tested it, came back up. So if you were looking at the 15 and 30, you would have seen that. And then right after that happened, we rocketed up. This one 15-minute candle went from 37.80 to 38.09. So about a 30-point move in 15 minutes. So that would have really paid. But the key is here, if you're looking for a reversal, usually the volume will come in at the peak of the trend and then it will reverse. If the volume doesn't spike on the peak or the valley of a trend, it's more than likely going to be a pullback. So we did have the low volume test here. Sellers were not there, brought price back up, and then we rocketed. This also happened to coincide with the release of the EIA oil report, and so that comes out Wednesdays an hour after open. So that was another thing to be looking for, and know that on Wednesday an hour after open there's possibly going to be a big move. So that's something to look for. So you got this move up again. We peaked here. This is another support slash resistance area I have, and notice that we peaked and volume was not there. So if volume doesn't come in at the peak, it's more than likely just a pullback. So again, we came down, tested this area. We tested VWAP right here. Notice it coincides with previous resistance becoming support. Volume slightly ticked up here, ever so slightly, and you could have took that bounce for another leg up. But I think this was the more clear sign to go long here once you saw that the sellers were not present. If sellers were present, this could have closed on high volume, or more than likely, this would have just sold off and closed down near the lows. So, got the push up. I would have taken profits at some here and possibly at this next area here. Volume did not come in at the peak, so we're thinking, okay, this is probably just a pullback. We do get previous resistance acting as support here, and then we push up again for another leg. Now notice here, volume what? Spikes at the peak. So we got into this zone finally, this supply zone at 3830 area. I believe that's a 4 hour for me. Let me check. Oh. Yeah, so that looks like it's about a 4 hour. I think I did have an 8 hour a little bit lower. Um, there's an 8 hour there. They're roughly the same. So, but going back to volume, and volume kind of tells you everything you need to know. So, volume spikes at the peak here. Now, looking at this candle, it's pretty bullish, so it would have been hard to get short there. But you know that the volume's up, so this is an area that you want to watch out for. Now, if you look at the 30-minute, this paints a much clearer picture. We get a shooting star with a tall wick on the top on high volume at the peak of an uptrend. What does that say? That signals reversal. So you could have entered here, 38.22 area on this close if you wanted, with a stop above the high, about 38.35. So that's roughly about, what, like a 13-point risk. If you wanted, you could have moved it up a little bit, maybe put like a limit order just slightly above the body of this to get a little better entry. But keeping this stop within about 10 to 15 points is about the most that I would want to risk on a day trade. So if you got in here at the with the stop above the high, you would exit your trade or scale out either at VWAP here or when volume spike comes in. So this to me, I believe this was the release when one of the Feds talked about 100 points being on the table for the next rate hike. So this caused a big reaction here. This was also a trend. So there's a trend line here as well. And I like to draw them from wick to wick. So my first trend line would have been here with this wick connected to this wick. And lots of times there will be these, what I guess people call micro breaks. So they will break the trend just by a few points and then buy it up. So they'll get people to go short thinking that, like the trend's broken, but there's no close under the trend line. And then they'll bid it back up, trapping a lot of shorts or longs, depending on which type of trend line it is, and push it for another leg. So, and then when this new one forms, I like to draw the trend line from wick to wick. So you would draw it like that to include the next wick. So again, volume came in at the top on the supply zone. This was also, let me do this really quick. This was also the golden pocket. So if you don't know, fib levels can help you pinpoint an entry. So anytime that price rejects from the 61% to the 70% area on the fib retracement, they call that the golden pocket. And you'll see that price tends to respect that area very well. So we had a lot of things lining up for a short here. You had the zone up here. You had the volume stepping in. You had the 30-minute rejection candle on high volume. And I'm trying to think, what else did you have? I think that's everything, but that's a lot of confirmations to go short. So you would have taken that short. Now, this comes in, news drops, we go down, but we didn't break this trend line. We just touched it. And then we got bought back up on extremely high volume. So if you were short, that would have been a sign to take your profits and possibly flip long because this candle closed only about halfway down the total length of it. So you know that buyers are very strong down here based on this volume right here. If it would have been the sellers that were strong, this would have closed much closer to the lows. And then you would have known that this is possibly going to turn into a short, or if you were short up here, that this was going to keep going down. So waiting for the confirmations on the 15-minute is very key. That's why I like to tell people to wait for the close because at one point this was a full red bar down here, and this looked like it was going to drop. Same with this. So that's why it's key to wait. You will not miss a move. I promise you. If anything, you will save yourself from getting in the wrong trade. So if you were short up here, this would have been your sign to close and possibly flip long. If not, you should have just taken your profits and been done on the day. And then finally, the end of day comes in. You do get that trend line break on higher volume. And I mean, me personally, I don't like to trade the end of the day. If anything, I like to trade till about noon or so. And if I'm in a trade nearing the end of the day, fine. But I don't like to get in any new ones unless there's something that really sticks out for me. So that's a little recap on the day for ES. This was a great long right here with the low volume test. The 30-minute here was a great short based on volume. Granted, it didn't follow through, but even if you got in on this close and sold somewhere down here, this was also a mini 30-minute demand zone, so you could have sold at that small zone. That was about a 20-point sell-off. So even if you took the next candle or two on each of these trades, you're going to net 30 points plus at least another 10. So that's about 40 points. Yeah, I mean, it was kind of a weird day, with CPI coming in really hot and then us just bouncing. I'm thinking that's just market makers trying to play games and trap retail. So we'll see what the next day does. It looks like we're bouncing again here, but I don't see us going up for a long time just due to, the possible 100-point rate hike from the Fed, inflation coming in really high. There's just a lot of bad signs that are out there for higher prices in the stock market. So I did play oil today, and I think I'm going to start doing that going forward. I'll show the trade that I took. Um, so we are in a demand zone here. And so the reason I was going to play oil is because every Wednesday, an hour after market open, the EIA report comes out, and that talks about oil inventories in the world, I believe. But usually it's a catalyst for price to move. So right here at 8:30 on the dot, volume spiked. We did get a very strong push right here. And so I ended up getting long slightly prior to this close. I want to say it was like just probably a couple minutes or so. I got in right around this blue line. This blue line is the close of the previous day. And so once we got to that area and held, and once we were holding above VWAP, I figured that that was going to be good for a long, and we were going to break some of these highs and stop out these shorts. So I ended up going long here around 96.31 or so. Again, on the volume spike. I did scale one here, and my exit was actually not very good on this. So I should have waited for a volume spike to come in, or target like this high or so. But I did scale one here a little bit early, and then my next scale out on my last contract, because I only bought two, should have been here. So once the volume spikes in your favor on a big candle push, you get out. So I should have gotten out here. This is 97.64, and my entry was 96.30. So that should have been about a 1,300 point win on a single CL mini. But I did not. I was holding. I was hoping that this was actually going to run a little bit higher up until this zone. Did not get that. And so I ended up exiting kind of at the same area that I exited the first one. So that was my fault for not executing properly and holding and hoping for higher prices instead of just scaling where I should have. But this was also another great short on this candle. So you notice that this 15-minute candle here engulfed the last two almost, and volume was extremely high. So you could have shorted the close of this candle, targeting, like the low down here. But if you're going by volume, it's very easy. You get in on the volume spike on a strong candle, and you get out or scale out on the next volume spike in your favor. So you would get in here, a stop. I wouldn't put the stop above the high. That's about $1.50. So on a mini, that's about a 1,500 point risk. So, but I probably would have put it, probably up in this area. But since this candle is so strong, there's not really a wick on top or the bottom, and the volume is really high. It's safe, in my opinion, to short that and not really expect too much of a pullback, because lots of people got long here and now they're trapped. So, and that was me also. I got long here, and then price started coming back down and kept dipping and dipping, and so all those people that got long here and bought are gonna have to close. So if you shorted the close of this candle, you could have held from here to here, and you could have scaled out either at this zone right here. This is a 15-minute demand zone, or you could have waited for this volume spike with a candle in your favor, to get out and almost nail the bottom here. And then this would be kind of a reversal candle, because you see that the body of this candle is much smaller than this, maybe about 2/3 or so, but the volume's higher. So if it were just the sellers that were active in this candle, it would be much larger. But the volume's higher and the body's smaller. So you know that there's a battle here between the buyers and the sellers. So that would be your chance to exit. And I believe, let's see, how much would you have made on that? Because that was a really good short. 96.50 down to 95.28. So that's another, what, $1,200 on an oil contract. So I think the 30-minute also helped here as well. We had this big push here, and then you have this candle that wicked at the high and then came back down on the exact same volume. I think they call this like a dark cloud cover, where this next candle pierces into the other one. Not 100% sure, but there are definitely signs here to go long and short if you were watching. So I hope that helps kind of show how I look at volume throughout the day, and how volume can really tell you when to get in, when to get out. And the reason I like it is because the guys that trade like the big money, the hedge funds, the banks, all that, they can play games with lots of stuff here with wicks and all that, but they can't really hide the volume. So volume really tells you where the big money is stepping in, whether they're pushing price up, price down, so that's something that they can't hide. And so I think that's a really major tool and key that us small guys should be looking at. So let me know if you like this video. Trying to think. I don't think I have anything else. Kind of went over the whole day. One thing that was kind of fucked up was they pushed this price higher, right? So I think this candle shot up about a minute before the data dropped. And so I was looking at that and I was like, wait, data's not out yet. Why is this going up? And then once I saw that, my charts actually froze while this started to drop. But I think TradingView actually caught this or didn't freeze as much as Tradeovate. But I just thought it was messed up because, yeah, they just trapped everybody up here, just ran a bunch of stops, and then just dumped it on everybody. So definitely an interesting day. Glad to be green on the day. Definitely could have managed my oil a little better. And I did not take this trade. I actually didn't take any trades on ES after this drop, just due to me making my profit on the day and not wanting to give anything back. But this was a great long. I think a couple of the members actually told me that they took this long, and I know a few other people took this 30-minute candle short. So yeah, so that's kind of an overview on the day. Thanks for watching. Let me know if you like these trade recaps and kind of what I see, and we'll see you guys later. Thanks.